Welcome back to Investing Talk podcast. Today we're diving into a really interesting name, operating right at the forefront of battery tech, Amprius Technologies.
Yeah, Amprius is fascinating. They're kind of caught between, this incredible proven demand for their product
Mm.
and some pretty significant challenges in actually scaling up production. They're all about advanced lithium-ion batteries, specifically their high-energy density silicon anode tech. They call it SiCore.
Right. And the big question we're asking today for you thinking about your portfolio is Amprius Technologies a good time to buy now? Because, you see this massive revenue growth lately, but you also hear about these hurdles they face trying to get from like a pilot setup to being a major industrial player.
Exactly. So our goal today is to really try and give you the clearest possible picture of where they are in that journey. We'll look beyond just the headlines about big contracts, dig into the Q2 2025 numbers, check out the technicals, and crucially, really scrutinize those execution risks. We want to give you a balanced view.
Okay, sounds good. And just before we get into the weeds, a quick reminder, please do hit that subscribe button if you haven't already. Give us a like and definitely leave a comment below. And hey, if there's another company you're curious about, drop the name in the comments. We do look at those suggestions. All right, let's talk about this growth engine first, because honestly, the top line numbers, they're pretty spectacular. Q2 2025 revenue, what was it, 15.1 million? That's a 350% jump year over year.
Yeah, 350%. And it wasn't just a one-off thing either. The first half of the year, they pulled in $26.4 million total. That's up 364% compared to the first half of last year. It just shows really strong building demand for these SiCore batteries. And you see it in the customer numbers too. They added, 43 new customers just in the first 6 months of 2025? The market clearly wants this stuff.
So what is it about SiCore? Why are people banging down their door instead of just going to the established giants? What's the edge?
Well, it really comes down to the product advantage. It's pretty stark. Amprius has hit this industry-leading energy density, 500 watt-hours per kilogram. Now, that might sound a bit technical, but what it means for, say, a drone operator, well, it means up to 90% longer endurance, longer flight time compared to the older graphite battery tech.
90%? Wow, okay. Yeah, that's not just an incremental improvement. That kind of leap really changes things, especially for defense, drones, that sort of thing.
It absolutely does. And you saw that play out directly in September. They announced that huge $35 million repeat order from a big UAS unmanned aerial systems manufacturer. The fact it was a repeat order tells you a lot, right? They liked the first batch.
And the market reacted instantly. That news sent the stock jumping, almost 14% initially? It's just clear validation that their focus on aerospace and defense is working.
Definitely. They're building credibility internationally, too. Nordic Wing, a big European drone maker, just selected them. So these are just test projects anymore. They're winning serious commercial and defense deals for demanding applications.
Mm-hmm.
The demand, that box is checked solidly.
Okay, demand is there, tech is impressive, but, all the revenue in the world doesn't help if you're just burning cash trying to build factories. Where are they on that road to actually making money? Profitability.
Right. Critical question. And they are making progress. Q2 2025 was a key moment. They actually generated a gross profit, $1.3 million, about a 9% gross margin. That's important because it's a flip from the gross loss they had in the same quarter last year. So they're starting to actually make a bit of money on the batteries themselves.
And operational costs, are those coming down as they get maybe more efficient?
Yeah, seems like it. The operating loss narrowed quite a bit. It was $6.8 million in Q2, which sounds like a lot, but it's way down from almost $13 million the year before. Net loss was $6.4 million. So look, the picture is pretty clear. They're definitely still losing money overall. They're unprofitable. But those margins are heading strongly in the right direction, and the losses are getting smaller.
Okay, so trends are good, but still losing money, which leads us straight to how much cash do they have to keep this going? Financial health.
Good question. We need to look at their liquidity. As of the end of Q2 2025, they had $54.2 million in cash and equivalents on the balance sheet.
54 million. Okay, sounds decent for now anyway.
And here's a really important point. They have zero debt, no actual bank debt. Now, there are lease liabilities, about $37.7 million. We need to account for that. But being debt-free, that's a big plus. It gives them breathing room for current operations and near-term expansion stuff.
But wait, we're talking about scaling up, right? Building giga-scale factories, that takes, hundreds of millions, maybe billions eventually. Is $54 million really enough liquidity for that ambition? Like you said, that sounds like couch cushion change compared to building a giant factory.
And that right there is the central tension. That gap between the cash they have and the cash they need for that gigafactory is huge. And that's where the dilution risk comes in. Amprius is funding this scale-up using what's called an ATM at the market equity program, basically selling new shares into the market. They've already raised about $53.3 million this way.
Okay, so they're tapping the market for cash when they need it or when the price looks okay. It works for raising money, sure, but
Oh.
how much can they keep doing that before existing shareholders start feeling the pain of dilution? Their slice of the pie gets smaller.
That is the question, isn't it? And they still have authorization to raise another, what, $46.7 million under that ATM program? You connect that to the already large share count, 125 million shares outstanding, plus another 19 million warrants floating around. Yeah, there's potential for significant further dilution in the near to medium term. This constant need for capital, funded by selling stock, it definitely casts a shadow, even with the great revenue growth.
Okay, let's pivot to those critical risks then. Because the tech could be the best in the world, demand could be off the charts, but if they can't execute, it doesn't matter. What are the big hurdles?
Well, the first major one, structurally, is customer concentration. This is a big stock-specific risk. Relying too much on just a few big buyers, if you lose one,
Yeah.
boom, it can seriously damage the business overnight.
And we know this isn't just theoretical, right? The numbers show it. Two customers make up, 52% of their accounts receivable. So over half the money they're owed is from just two places. And those same two customers were 41% and 11% of Q2 revenue. Losing that 41% customer, wow, that would be a massive blow.
A huge blow, exactly. That's risk number one. Risk number two, and arguably the even bigger one right now, is executing on that gigafactory. Look, they're making batteries now in their expanded Fremont pilot line, and they're using contract manufacturers too. Together, that gives them maybe up to 1.8 GWh annual capacity. That's fine for now for these initial contracts for R&D, but it's not going to satisfy massive global demand.
Right. The long-term dream needs that dedicated, huge gigafactory. And this is where the story gets tense. What's the latest on that big project?
Yeah, this is the core problem, a thing that's kind of counteracting all the good news on revenue. That planned GWH factory in Brighton, Colorado.
Yeah.
The one that's supposed to be their future. It's currently on hold.
On hold. Oof. That doesn't sound good. Not just delayed, but actually stalled. Why?
Pending funding. And apparently, there's some negotiation around potentially subleasing part of the site. So basically, they haven't secured the money needed to build it yet. And this failure or delay in getting that funding and moving forward in Colorado, it puts the whole long-term growth story in jeopardy. Investors are rightly asking, can they actually make this leap from niche supplier to mass producer? The uncertainty around Brighton is probably the single biggest weight on the stock right now.
It's just so strange, isn't it, to have this potentially world-beating tech, incredible demand, and then get stuck on, on financing and real estate deals. It really shifts the whole investment time
It
frame.
really does. Now, before we look at the stock chart, let's quickly check insider sentiment. Are the execs, the board members, are they buying shares hand over fist during this uncertainty? We looked at the recent filings, and nope, there's no recent cluster of significant insider buying.
Right, so the people who know the company best aren't seeing this current price as a massive bargain they need to jump on.
Pretty much. The activity you do see, like some Form 144 filings back in August, looks like standard stuff, planned sales related to stock options vesting, people getting compensated. It's not insiders dumping stock in panic. So overall, insider sentiment, it's neutral. Not bullish, not bearish, just neutral.
Okay, that makes sense. So let's see how the market itself is digesting all this. Amazing tech, great growth, but huge execution risk. How's the stock price behaving? As of, say, mid-September 2025, it closed around $8.10. And the trend this year has been, mostly sideways, right?
Exactly. That sideways churn, that consolidation is the market basically saying, we don't know. It perfectly mirrors that uncertainty about the Brighton facility and the funding. The stock's just treading water, waiting for a clear signal.
And technically, where does it sit? Any key levels we should watch?
Well, it's hovering right around its 50-day moving average, which is sort of in that $8.10 to $8.40 zone. And the technical indicators, like the RSI, the Relative Strength Index, they're smack in the middle, like 45 to 55, totally neutral. It screams wait and see.
And it seems stuck in a bit of a range recently, too, like bouncing between support and resistance.
Yeah. Pretty clearly defined. You've got pretty solid support down near $7.80, and then resistance overhead in the $9.40 to $9.06 area. Unless we get some major news, either really good news on the factory funding or Maybe bad news like losing a contract, it kind of feels like it could just keep bouncing between those levels for a while.
So what kind of news could break it out of that range? What are the catalysts we should be watching for in the next, say, few months?
Well, the most immediate scheduled event is the Q3 2025 earnings release. That should be around the end of October. Investors will obviously want to see if that revenue growth continued after the big UAS order, but they'll also be digging into the margins again, and really importantly, the cash burn rate. How much money did they spend?
Right. And updates on executing existing contracts, like that Defense Innovation Unit deal, that $10.5 million one.
Yeah, progress there is good, but let's be real. The number one catalyst, the thing everyone's waiting for, is any news, good or bad, about the funding and the plan for that Brighton Gigafactory.
Yeah.
That's the main event.
Okay, that's the big known catalyst. What about the more speculative stuff? The kind of what-if scenarios that get people excited?
Oh yeah, there's always market chatter, right? Speculation mostly centers on a few things. One is even bigger defense contracts, maybe building on that UAS success.
Or the really big one. Could they land a pilot project with a major car company? An automotive OEM wanting to test out SICKOR for high-performance EVs. That would be huge validation outside of aerospace.
Absolutely, that opens up a massive new market. And then, given their unique tech, there's always the possibility of M&A.
Yeah.
Amprius could become a takeover target for a bigger battery player or maybe an aerospace firm wanting that next-gen IP. But again, realistically, the single biggest measurable long-term driver, the one that unlocks serious revenue, it's getting that Brighton factory built and running at scale, if they can do it.
Yeah. Okay, so summing it all up. World-class tech, fantastic demand, improving financials, but major customer risk and this huge question mark hanging over their ability to scale up production. How do you synthesize all that into a final verdict?
Yeah, putting it all together, based on everything we've looked at, our overall rating for Amprius right now is a 4.5 out of 10. The fundamentals did getting better fast, that revenue growth, the narrowing losses, it's impressive. But those risks, they're just too significant at this moment. The customer concentration, and especially the uncertainty around the Brighton project funding and timeline, it creates too much doubt for a high-conviction long-term bet right now.
A 4.5 out of 10. So what's the recommendation for someone listening thinking about putting their money here?
Well, the conclusion we draw from the analysis is that Amprius Technologies is not recommended as a core, high-conviction long-term investment at this specific point in time. Not until we see real, concrete progress on either achieving profitability, securing that crucial project funding for Brighton, or significantly diversifying their customer base.
Yeah.
The risk-reward just isn't quite there yet for a long-term hold.
Okay, not a long-term hold yet. But you mentioned the volatility, the news flow.
Right, and because of that volatility and how the stock reacts sharply to news like contract wins, the analysis suggests it's probably better suited right now for short-term trading. Playing the swings around earnings reports, major contract announcements, or other specific catalyst events. It's more of a trading vehicle currently than a stable buy-and-hold growth story.
Got it. Trading vehicle, not buy and hold. Makes sense given the risks.
And maybe, here's a final thought for you to mull over, circling back to that core issue. If, and it's a big if, but if that Brighton, Colorado GWH facility suddenly secured full funding tomorrow and construction got fast-tracked, how quickly would that change the entire narrative? How fast would that neutralize the execution risk and shift Amprius from being just a trading vehicle into potentially being a genuine buy-and-hold growth investment? Think about that transition and what might happen to the stock price if and when that catalyst hits.